Okay, so today we're talking about reconciling, and we've talked about this, or it's come up quite a bit. Let me get that door that the dog just opened. The door does not shut very well. But we talked about this a lot as far as what accounts do you reconcile, and are you really reconciling from an accounting standpoint, or are you just using like the bank feed feature and then clicking reconcile in QuickBooks? And most of you guys have clients where you're doing very month-end bookkeeping for. You connect the bank feed, you categorize just from the bank feed. There's nothing else connected. The client isn't using invoicing, isn't entering any expenses, nothing like that. So really you have the bank feed. The bank feed comes in perfectly. So of course it's going like it matches the bank statement. There were no glitches this month. You hit reconcile and you're done. Okay. In that case, in a lot of ways, we are reconciling the bank to the bank. We are reconciling what's in QuickBooks to what's in the bank statement. And that catches only if the bank feed glitches and brings in duplicates. That is the basis of what a lot of you guys are doing for your clients. But then when you get those clients, you learn how to do bookkeeping from that client. And then you get a client who's actually doing accounting and real bookkeeping in QuickBooks. And then we start to get stuck. We do a lot of one-to-ones, which we're happy to do. We want to save you time in doing this step. Where because that's what you think reconciling is, when there's issues in the bank feed, you're not equipped yet to handle them. And so today we're going to talk about what that might look like. So what actual reconciliation is. Yeah. QuickBooks was originally, or like QuickBooks is designed to make it easy for the business owner, right? In doing so, you're going to see a lot of language that's going to make sense to a business owner. Income, expenses versus like revenue and expenditures, right? You're going to see the bank feeds called bank feeds. You're going to see very basic things going on in QuickBooks. The software itself, though, is designed for the business owner to say, I have an expense, so I'm going to enter an expense. I have an invoice, I'm going to enter an invoice so that I can receive a payment. I've got a bill payment I'm going to make. I've got a check that I just wrote, and it's designed to enter all of those using the QuickBooks functionalities. So if you click plus new expense, enter the expense and the date of the expense, right? Ideally, we would match the receipt to it. Same with an invoice, hey, or a sales receipt. I'm going to collect a payment from a client, or I'm going to deposit a check. So I'm going to do a bank deposit. I just received cash from a client. I'm going to hit receive payment and I'm going to apply it to their invoice. It's designed to formally use those transactions so that by the time you, the bookkeeper, have the bank feed connected, you should be clicking match versus categorizing there. So they get categorized on those formal entries into QuickBooks. That is the QuickBooks accounting software. Then we go to the bank feed and we match. We say, yep, that went through the bank. Yep, that went through the bank. Yep. You know, everything matches. Then when we reconcile, we then want to make sure that what we entered into QuickBooks that was supposed to hit the checking account matches what actually did. So was there anything that we entered into QuickBooks that didn't clear the bank? So maybe September 30th, we wrote a check to a contractor for $100. They cashed it October 2nd. So it clears the bank October 2nd, October 3rd. That should be left on the bank. You're going to reconcile, you're going to get to the ending balance, but if you were to select that check, you're not going to reconcile. So you don't select that check and you leave it there. a lot of times when you guys are doing cleanups, you will, you'll go through the bank feed, the reconcile screen. You're going to go through the bank statement. You're going to check off what's there. Well, by the time you're done with the whole year, you see a ton of stuff still on there from April, May, January, just a bunch of stuff. Your goal every month is to know exactly what cleared and exactly why everything that's still left on that reconciliation screen, if anything at all, why it's still there. If you don't know why it's still on that screen, you are not done reconciling. So there should either be nothing on the reconciliation screen, or you should know exactly why it's still there and if it cleared. So if you're reconciling today and the bank statement was ended September 30th, so today's October 9th, we had that check that we wrote on September 30th. We can see in the bank that it cleared on the 2nd. So we have confirmation this did not clear in September for September. It cleared in October. And actually in QuickBooks, like if you've already matched, like you've already done the weekly bookkeeping for the client, you're going to see a clear date, October 2nd. So that's going to tell you. Otherwise, you're going to log into the bank, pull up the bank feed, whatever, and verify that it cleared in October. Otherwise, you're going to send an email. You might send an email. Some of you guys should do this. Some of you, not your deal. And, so I have a client where they cut checks. If we're talking 30, 60 days out, I'm emailing the client. Did so-and-so lose their check? Do they still have their check? Are they still planning on cashing it? Is it still valid? Because checks technically, right, have a life on them, a shelf life. And we want to make sure our people get paid and that they still have funds. Okay. All right. So if you guys have questions, go ahead and put those in the chat and I'll get to yours, Michelle. Okay. Michelle, I saw this come through when I was talking, but are you referring, can you post in the chat if you're referring to like the bank feed connecting, like disconnecting? Is that what you're referring to, and creating duplicates or skipping transactions? I think that's what you're referring to. Because otherwise, like, it doesn't matter credit card or bank account if like you're entering transactions and matching. So I think that's what you're referring to there. I was referring to uncleared transactions when reconciling. Like the client swiped their credit card September 30th and it's still pending October 1st.
So I was referring more to when you're clearing the bank at the end of the month. I find most of the time that there are uncleared transactions as far as like they didn't match. So the client might input them, but they don't have like the square with the C showing that it came through the bank, or if it did come through the bank feed for the credit card, let's say it happened on the 15th, the card reconciles or closes on the 26th, that did not clear. Those transactions did not clear. Does that make sense?
So the client knew that they purchased something on a credit card on October 15th. So they entered it into QuickBooks?
Yeah, sort of. So what I find two different things when especially with credit cards. The first thing is the client purchased something on the 15th. It came through the bank feed as hitting the credit card. When the credit card statement comes out, that purchase is not on the credit card statement when it closes on the 26th. And that should have given plenty of time to clear. And it just never shows up. It's like the credit card company didn't recognize it or process it, even though it came through the bank feed and was matched to a transaction. And then the second thing that I find is the client will input, it could just be a duplicate, where they'll input the transaction on their own for the credit card purchase, but it never comes through the bank feed. And so those I usually just clear out. I reverse them.
Yeah, I don't think that's a common thing. That sounds like the wrong account is being selected.
Interesting.
Like it sounds like, do you know the credit card company that you're referring? Like, is it a specific credit card company?
No, it
Like
can
Amex
happen
or
to, so it happens through multiple credit card companies. It doesn't happen all the time. Just occasionally, it seems like it drops off. It could be with Citi, Chase, or Divvy.
is
And
this
a
the
lot of
same
times,
client?
no, different clients. It's happened through different clients throughout the years.
I
And
don't have that as a reoccurring issue unless the
hmm,
client like doesn't select the right credit card because you have to figure out. So they're saying that they purchased something, right? So like they're saying I went to the store and purchased pens, and I entered it into QuickBooks. But you're saying it came through the bank feed, but it's not on the statement.
yeah, so there's two
Did the
different
client mark it
scenarios.
as fraud?
No, the
Like if
client
they
did not mark
paid
it
for
as
it
fraud.
with the credit card,
Yes.
unless there is a refund or something like that, like transactions just don't go missing.
Sometimes they just don't show up on the card. And said it doesn't happen often, but I'll see it occasionally where that has happened. There's no refund unless maybe they purchased it and refunded it in the same day. I mean, I don't know if that's possibly how it drops off, but there is no corresponding refund that comes through the bank feed or is listed on the credit card statement.
That is not a normal scenario.
I know
And
it
so
happens
it's interesting that you have it
occasionally.
on multiple clients. I think there might be more going on behind the scenes because it's even rare for a refund to happen same day and for them to not include it. Now, occasionally, I mean, funky things do happen. I was just working with someone on a credit card where the credit card company applied the wrong payment, like a payment to one card, but they actually applied it to this card and another separate card, and they're not child accounts. They're completely separate cards that this account has with
Right.
this company. And so there was a duplicate payment applied to both cards, but there's only one payment that left the client's checking account, right? But it was a credit card company error. And so as the months went on, we could see them trying to figure out how to correct this on the statements. Like it went in and out and in and out. And that was like a funky credit card statement error that the credit card company have. So, I mean, can credit card companies have errors? Yes. When I first started my business, I used a bank and I made a payment or like a transfer to a bank account, one of my business bank accounts. Something happened where it was returned, like the payment was returned to me. It didn't go through, it didn't hit like the actual business bank. It came back to my checking account, like my personal
Mhm.
checking account. The business account deemed it credited and like it went on for years. It like never got corrected. I finally had to like write off this like random transaction. It was the funkiest thing ever. Because and I
It
didn't
doesn't
catch it right
happen.
away. Um,
It, yeah.
so
Like I said, it doesn't happen often. I might see it maybe like once a year on one client. It's never the same client. It's happened with multiple clients. And Typically it happens with like a Citi or Chase card.
Yeah, I mean, there's a lot of transactions, so there could have been something that goofed on behind the scenes, but I'm just saying that that's
Yeah,
not a normal scenario, right? But that's
right.
also the importance of reconciling because we want to make sure whatever's in I get muted at the random times this week. My Zoom is doing something super. I muted again. Guys, I'm hitting some button. If anyone knows what button I'm hitting, let me know. No, it's not coming in and out. It's just it got muted. It's like it automatically muted me. So with that said, we want to make sure whatever the client's paid for is captured as an expense, whether or not I mean, we want whatever money moved to be recorded. Yeah, okay. So can you go over how to handle unclear transactions? But Michelle, that's exactly why we have to reconcile QuickBooks to the credit card. And that's those expenses, right? Those are still like theoretically expenses to the business. And so we could maybe record it as a refund. Maybe it was a refunded expense or something, but we would dive into each of those scenarios individually. Okay, so uncleared transactions. Formally speaking, Cameron, I think you're working on a cleanup that goes back historically. And you might be dealing with some erroneous transactions based on how the bookkeeping was done. That's often why you're going to find an unclear transaction is, so there's, let me pause. Cameron, what I'm saying is there's multiple scenarios for unclear transactions, and we have to determine which one are we dealing with. In your case, for some of the clients that I know you're dealing with old history, and we are truing up the bank account, so you should be able to just clear them and get to that opening balance based on the journal entry we did. So there's an accounting error going on for multiple years, hasn't been reconciled. Tax returns have been filed. The client has elected to go based on what the tax returns say, and what the bank says, right? So we're gonna force that through. Two, you have erroneous transactions entered into QuickBooks. Okay, so I had a client using Amex, and this client did a lot of entries into QuickBooks themselves. So they would purchase something, they'd go enter it into QuickBooks, and then it would come through the bank feed. They would code it on the bank feed without matching to this other transaction, right? So now I have two entries for the same transaction that weren't matched. So one's erroneous. So I would undo the bank transaction. I would match it, and now I can clear. What happens a lot of times is, especially new bookkeepers, are going to go through the bank feed and they're just mindlessly checking $5.18, $5.18, $20, $20, 40, 40, $60.40, $60.40, and they're just going through and checking that off, right? Well, you get to the bottom and you're like, oh, I have a $60.40 transaction left. Well, you've already hit reconcile. So now you don't remember that there was already a $60.40 transaction that you could have just corrected, right? Because you've had it sorted by date, but they put the 30th, it cleared on the 3rd, right? Or something funky. So now you have two different transactions. You have to figure out what to do with it. So in that case, I'm going to go search QuickBooks. I'm going to search $60.40 and see if that's the case. If so, I'm going to undo it. So I don't finish reconciling until I know what is going on with every transaction on that bank reconciliation screen. Meaning, like I want to see both of the, like I'm going to then sort by amount and see if there's any duplicates. And then I'm going to check each of those transactions to see if they're entered in a previous month a different month, like if there's not actually supposed to be two transactions, right? We pay this vendor once a year. QuickBooks is showing that we paid them twice this year for the same amount. I'm going to question that one and be like, did we really pay them twice? Then I'm going to go to the whole bank history in the actual bank, like bank account. And I'm probably going to just do a search. That way I can pick up if we paid that vendor multiple times. So I'm going to do some investigating. So I'm going to use accounting or just some investigating skills to investigate this transaction that's still on the screen. If it's a check, those are pretty easy to see. Did it clear in the following month? Most often, the biggest thing that the biggest hangup I see with a lot of bookkeepers is payroll liabilities hanging out on the as uncleared transactions. We're not seeing them go through. We don't know what to match it to. Often we're coding it and we're not matching it because it looks funky, or we're just doing it differently than QuickBooks is processing it, and so we have to clean that up. Or we told QuickBooks, hey, we paid this, but then we didn't match it to the transaction. And so QuickBooks is kind of recording two different payments for this payroll liabilities, or we're telling QuickBooks, hey, we paid it, but the business owner still hasn't written the check. And so we've told QuickBooks, yeah, it got paid on the 30th. It's now 2 months later, it still hasn't paid, so it's still sitting on that uncleared transaction. So some of it's stuff that we have to monitor what's going on with it. Some of it just needs to be investigated. Some of it is because of a cleanup, and I don't know which one you're referring to here, and how do you handle old uncleared transactions. Prior year, I've answered that. The other one would be old transactions, like for 2025, if we're doing a fiscal year, January 1st through December 31st, and there's uncleared transactions in February. We want to go back and investigate why those are there. Are they erroneous, meaning fake, meaning they were just entered way incorrectly? Were they not matched? Were they a duplicate? Because if they're a duplicate, that is the whole point of reconciling, is to start to identify those your financials are wrong. So if you've been sending out monthly financials, you've been overstating maybe an expense account, a liability, things like that. Okay, I would love to see what the true way to do a monthly payroll reconciliation. We did this on a co-working call with me a few weeks ago. Was anyone? No one from that call is on. We did do that inside the course a few weeks ago. I can also do that with you on a one-to-one. Absolutely. And I think we've talked about it really heavily on these podcasts. If you want to go back and re-listen to some of them, I know we've covered that really extensively in the last quarter of podcasts. So let me know if you have any specific questions, but I'm happy to do that with you on a one-to-one. I'm also happy to show you where that is in the recorded calls for anyone that's in the Bookkeeper blueprint. I can point you to those. Or I can do one on the next co-working call next Tuesday night. We can walk through that there too. Okay. But ultimately, any way that ultimately, a true reconciliation is taking the source document and verifying what's in QuickBooks. Are they correct? So if you're doing QuickBooks payroll, there's a report that you can even pull that says tax payments, and you can verify what the tax payments are. Okay. And so you can take that list and then check them off, and then you can formally reconcile it to the liability report. Especially for those of you who have clients that, you see a bunch of IRS payments, you see a bunch of, state payments, and you're like, I don't know what's what or what goes where. I don't know if it's an EDP payment or, a CA payment. just meaning different departments of whatever state you're in, right? And they're going to all be called different. They're going to all come through different. Those reports in QuickBooks, if they're using QuickBooks Payroll, will help you out. Gusto has similar reports, and we use Gusto primarily. But I've been helping a lot of students with QuickBooks Payroll recently. So. Okay. Any other questions on reconciling or what it means to actually reconcile? Because I also hear from students all the time, they wonder if they're doing it correctly. So if there's anything that you've been that's been nagging at you and you're like, I don't know. And you can chat me privately if you don't want like your name seen. If you're like, I'm too embarrassed to ask this question, feel free to ask me anyway. And everyone learns accounting at different rates. When I was in high school, my accounting teacher pointed out that like accounting is something you learn over time, but when it clicks, it does click. And it takes, so like it can take 5-10 years for certain aspects of accounting to click for you. I have now been doing accounting for a long time. So, and there's still some things that just aren't in my realm, right? They're more tax than they are accounting. So, and there's always rules that change. But here we cover mostly fundamentals of accounting and bookkeeping so that you guys can do it more efficiently in what you're doing with QuickBooks. Yeah, Michelle, I'm going to be looking to see if that's like I think if it has happened, we've just dealt with it as it's come up and it's never hit my radar. If that's a like global, especially if it's like one transaction a year, it's not going to hit my radar as like a thing. I'm just going to deal with that specific transaction and do that. So, okay. Outside of reconciliations, yeah, so it just like hasn't like, been significant enough for me to track. But I will keep a look at it, out for it. Is there any other questions that you guys want to post in the chat that are just relevant to bookkeeping in general? Or anything else I need to further, and we'll continue talking about reconciliations, especially going into year end. Ultimately, you need the source data. You can't reconcile without a bank statement ever. You can't get to the beginning balance without a bank statement. Another common error I've seen with different banks, this used to happen a lot with Green Dot Bank. I don't have so QuickBooks Checking. I don't have a client using QuickBooks Checking right now. But there was, when they first rolled it out, I had some statements where the ending balance didn't equal the starting balance of the next statement. That would be an issue. And so we have to figure out why. In this case, it was actually a QuickBooks issue, like error. And it corrected itself in the following months, but we kind of got stuck and we were like, what's going on? Why isn't this reconciling? Until I figured out that it was, the statements don't match. So anytime I'm doing like a January to like a December to January cleanup, Cameron, I know this is affecting you right now. I was just working with another student who this affects. I do get that prior December statement of where I'm starting. So if I'm starting January of 2025, I would request the December 2024 statement. Because I want to make sure I've got accurate cutoffs.
Hey, I got one question about so like credit cards that cross years, but it's like not a clean cutoff. So like if the statement is as of 12/15 to 1/15, and I'm trying to like reconcile, I'm trying to do a cleanup for only the following fiscal year. How does that, what's the best way to handle those?
Yeah, so You still have to capture those in between. Like you still have to capture January 1st through January 15th transactions. Most often with students, the easiest thing to do is to go transaction by transaction and make sure everything's in and reconcile that statement. And so to do a beginning balance as of the start of that statement, that often is the quickest way to help students get to that point. If not, you could total what's December and then total what's January and do that math to get your opening balance. But and then I would be asking the question, were in fact those, so you said like December 15th to January 15th. So were the December 15th through December 31st transactions actually captured on the tax return? That's another thing I would be asking. And so once I know those answers, then I could move forward. But so often with students, it's just easier to make sure, hey, these transactions are in the prior fiscal year. These are going forward. But were they captured in the prior fiscal year? So I would determine that. If not, they need to be captured somewhere. And, like, will their CPA take it in because they didn't expense it in 2024. So are we expensing them in 2025? And is there historical precedent for them to do that? So if they didn't capture it, it might be worth capturing in 2025 as expenses in 2025. Yeah, hopefully that makes sense. But for sure, the January 1st through January 15th transactions have to go on the books. Okay, what's your question about startup cost?
So there's a client that they started their business in September, and they have a lot of transactions that was on their personal, like from April, January even. And I know this business doesn't have any income now, so I definitely don't want to expense anything now. And I think it should be capitalizing it as startup costs. So if the business starting books, that's going to be the first day is going to be whatever is on their filing receipt or their articles of organization, right? And then anything prior to that should be considered startup costs and should be capitalized.
A lot of times that's the easiest way to do it. It really depends on what those costs are. So if it's like a deposit for their location, purchases for inventory, legal costs, permits, stuff like that, would be included in startup costs.
Okay, so I would basically just be gathering all of that stuff. And, I have like the bank statement from the personal that shows all of those transactions. I would just like do one journal entry and to startup costs, upload that statement. And that's basically it, right? As a fixed asset. And then it's going to be up to the
Yeah,
tax preparer to do an amortization schedule.
I wouldn't do it. I put the transactions in individually.
Okay.
That way I can see the dates of them because it's not all happening in the same month.
Right.
It was pretty spread out. So I'd be doing it by transaction, but that's just me. That's how we do it in my firm.
It's like processing like manual expenses going toward that fixed asset account for each transaction.
Yeah, or if you have a spreadsheet, you could just upload them using like Sassen or Right Tool.
Okay. And then it's up to the tax preparer to make that schedule, right? Like when they should start amortizing or how they should start amortizing.
They will start year one. But if it's a partial year, they'll if you go read the gap guidance on it, there's likely a partial year depreciation on it. So they'll do it like by months versus so it's likely that they'll hit like a 6 months, right? So if they're open for 6 months of the year, they might get credit for 6 months for year one.
Okay.
But if there's zero income, like, what is their fiscal year? Is it,
It's the December, like December 30th,
and
31st.
there's not going to be any income before December 31st.
Well, we don't know. So I mean, right now there's none. Like it's nothing, just expenses and a lot of them.
Yeah, so there might, so they all might be startup costs.
Mhm.
And then once they earn income in 2026, then they might file their first tax return.
Yeah.
So yeah, I would do dates. I would do the actual bookkeeping. I wouldn't do journal entries because you need the data.
Okay.
So you're
So yeah,
doing all of
processing.
2025 cleanup and you'll need to charge them for such. Now it's
So
not a month, it's not the same, like, this is where that onboarding
yeah,
charge that I do would cover doing what you're doing right now.
I'm gonna be honest with you. So I just onboarded somebody yesterday, and I presented. They initially told me that they were in business for 3 months, and I reviewed the information that they gave me, the statements and transactions. It's very little transactions, but it stems all the way to April or April, like January. But he told me that it needs to be startup costs, and he told me to start. He finally told me that this actual filing date for the entities were multiple of them entities were in September. So he's like, I don't know why we would be paying for 3 months of work, if it's only going to be 1 month in business, and then I'm just capitalizing the startup costs. And I'll be honest with you, I caved, and I said that I'll go ahead and just do for the 1 month because I wanted to get the client, and I went ahead and agreed to it. So it's really only going to be just 1 month of cleanup, and then recurring services after that. So I'm just going to eat it because where my stage is now, and I
Saying
just
charge full bookkeeping back to April. So
so you
I
would
would
have
have done
charged
some.
all the way up to April, like each.
No, because there's not enough bookkeeping there to do that, and that's exactly what I was just saying. So you didn't cave. I would be careful with the language you're using because that's also like, our language is powerful, right? You
Mhm.
didn't cave. You made a decision and you stand behind it. I
Yeah.
wouldn't have. I would have done something really similar, and
Okay.
that's why I quote the way I quote, is to take those on. And that's why I said my onboarding charge covers that work,
Yeah.
covers me anticipating things like that.
Hmm.
So I wouldn't have charged, $500 a month from April, May, June, July, August.
Hmm.
But I would have charged an onboarding and the first month at least, unless there was like, in that situation, like the business started like
Yep.
September 1st or whatever. And then I have, but this is where, Cameron, you need to get really clear on your pricing structure. And you are not yet clear on your pricing structure. You're trying to get there, but you're not quite there. And part of that is you haven't quoted enough, consistently enough. So you haven't implemented a pricing structure to quote over and over and over again. You're experimenting right now still, versus like you're experimenting, you're running two experiments at a time. You're experimenting with pricing and you're experimenting with clients.
Hmm.
Versus if you had your pricing set and a methodology to quote, you would just be experimenting on how to handle those clients. In science, you don't run two experiments at the same time.
Hmm.
Um, so just something to consider. And then I also have a structure in my pricing for this situation. And then I have a scenario if there's like actual cleanup for different periods of time. So I know exactly how I'm going to quote, what you're going to quote, who falls into that for each of these scenarios. And part of that is I've gotten to the point where I'm like, like in the scenario you just did it. Oh, my pricing structure for these other clients doesn't fit this client. So what is this scenario? And then how can I extrapolate it to others? Will I ever run into this scenario again? You'll run into the scenario you just told us again. So how are you going to quote for it? And then is there any way I can systematize this quoting across the board? That's where my onboarding charge comes from.
Mm-hmm.
Is because I've encountered this scenario and my onboarding cost helps like cover very different scenarios, but multiple of them. So instead of having, oh, this scenario, A, B, C, D, the onboarding cost covers A, B, C, and D.
Mm-hmm.
Right? Like that's how much I've thought about that. Now,
Okay.
I'm not telling you have to have an onboarding process, like first month of bookkeeping costs, but you do need to have a process for quoting. That way you're not telling me, well, I caved and did this. You didn't
Yeah.
cave.
Mm-hmm.
You came up with new pricing on the fly.
Yeah. I mean, I do. So this is another real estate investing client, and like the pricing calculator that I was using with from you, like it just things were looking too expensive because of just like the way these real estate investors are. A lot of them with these disregarded entities. So I've been using another structure from another that's like a real estate investing bookkeeping group, and I've been using that structure, and I priced based on that, and I feel like it came out okay. It's just
Yeah, ours
yeah,
has to be edited for real estate. And I
mhm,
could show you how, but you've already got one.
yeah,
I'm just saying, even though like that calculator is for the course. So like that's not exactly how I quote. That
hmm
is the average of how all of the coaches quote.
mm,
Um, and I often quote higher than the quoting calculator calculates.
okay,
So like I am on the higher side often. And that's just how I quote. Um, so there's a couple of different ways to use the quoting calculator. We talk about that inside the Bookkeeper Blueprint. Um, we've done trainings on that specifically. And then that should just help inform your pricing structure.
hmm
It doesn't have to be the end all be all. Some students use it as, hey, I'm just going to plug it in. It is what it is. But I now don't do cleanup exactly that way. Because of all the scenarios that I've, but for someone who's like chronically underpaid, that calculator helps. And then
hmm
you can always adjust the prices. And then I have helped other people in other industries tweak that calculator. So for anyone listening to this, it is tweakable, it's editable. And so you can edit different things. So if you run into a scenario where you want to add something, an onboarding fee, maybe instead of having AR, AP, or classes, um, you want to do a real estate section that can be
hmm
easily added. If you don't want to charge by month, but you want to do your cleanup differently, on tab 2, you can edit the pricing for that. So there's a lot you can do with that calculator. It's just the bones to get you started, which is why we made it in spreadsheet form versus doing the web-based. We used to have a web-based calculator, but you couldn't edit it the same way. And so we stopped using that. Where like you just logged in and you put it in. It wasn't Calconic, it was another like site that we created for pricing. It just you couldn't edit it the same way, so we didn't keep using it because
So
all
for
bookkeepers quote differently a little bit.
so for this, if this business has a loss, they don't need. Well, no, they have to file because this is another C corp. So no matter what, they have to file, right?
They'll need to talk to their CPA.
Okay.
Bookkeeping still needs to be done. Yeah, and so Michelle just said that she does track her true cost and everything. Cameron, I know you're doing that, and I do the same thing, and so do a lot of the coaches, which is why we use that information to create the pricing calculator. But I then did a big analysis on my own business, and I used that to inform like what needs to be changed. And when I did that, I overhauled my pricing, and that's where, because of cost, what I want my maybe what you want your profit margin to be, whatever, you should be able to use that to inform, am I quoting these correctly? And then one of the reasons so I have a quoting calculator from the course that I have tweaked for me specifically, right? I run that every quarter for different clients. So in my keeper, I have a workflow to check in on different clients to see, based on that, like, have they increased? And then we also track time, billing, the ROI on it. So you should be able to, over time, put in a system that allows a team member to even maintain where are we at? Are we quoting correctly? Are we not? And that also lets me know when clients have scope creeped on my team members. So, I haven't noticed it. The client's not talking to me, but all of a sudden, I'm like, we're making how much on this client? What is going on? We're spending much, how many hours? And I find out, oh, we're now doing invoicing for the client, or, the client's been asking us for this report, and so we've been sending it. Staff doesn't necessarily think like a business owner. It's your job to have systems to pay attention to that. So all of that globally, as you grow year over year, you're going to set up systems that you can implement for years to come. Okay. Yeah, I can tweak the quoting calculator with you, especially if you know what you want. As long as you know what you want, I can help tweak it. We won't have enough time in the call, in like a 30-minute call, to do like me to say, hey, this is what you should be doing, and then do it. So as long as you know, hey, I want to achieve this, this, and this, we can tackle that. But it's all formula based. So yeah, I'm happy to do that with you. And then Cameron, I think you can just, I don't know if you purchased another bundle, and then that would, I mean, you're using them, and yeah. So I would do that. That'd be the most cost effective for you, Cameron, since I know you're meeting a couple of times with us. So. Okay, guys, any last questions before we jump up? Michelle, you're doing a great job managing your things. So, but yeah, you can either adjust by raising prices or stop doing the stuff that you weren't supposed to be doing to begin with. So, okay. Yes, the Bookkeeper Blueprint program does include calls. So you have different options. You have the unlimited, which also comes with unlimited calls. Yeah, you gotta have a way to track it, because sometimes you can feel like there's scope creep, and you're like, oh, you're one of my most profitable clients. Let me just keep you happy. You're good. And it doesn't, really ding the client to momentarily reach in for 1 month to love on them. That would be like client success. You'd consider some of those things, like, let's keep this client happy. They randomly ask me a question. They never bug me on this stuff. I can absolutely serve this client. Maybe you charge for it and you're going to say, hey, client, this is normally 140, 147. Likely those clients are going to pay the 147 or whatever it is, the $500, whatever that is for you. They're often going to pay it. So if it's something that you charge for, great. If it's just, hey, I need to connect with you. Remember, we're humans and we like connection. I know everyone wants to like nickel and dime, and I spent time with a client, so I should bill it. I'm not a lawyer. if the client wants a personal connection and wants to call, within reason, right? This client never talks to me, but needs a phone call. Absolutely. How are you doing? Right. But I view like my skill is very much like it's a skill that I can use to the glory of God. And if a client needs to call me, you know what? Some of the most fun calls come from clients like that. Like, hey, can I just connect with you? Yeah. And then they're telling me they've got some stuff going on and they're adding a new business. They just got, something happened. Cool, great. Let me support you. Here's what that looks like. I'll send you this over. So don't just assume a client, like, and Michelle, you're not doing this. I am just cautioning people that are listening on the podcast. Don't assume that because a client reaches out, it's that you're in trouble. Don't assume that they're going to ask for more work. But make it a mission of your business in some aspect. If you're going to be people relational, some of you guys don't want businesses like that. You want to be bench.co, get a client, give it to someone, you don't do anything with it. Just know that that's what you're doing. Mine is very boutique, very human touch, right? High touch, yet very low touch. Like, I want to talk to you. I want to get to know you. But don't bug me about don't nitpick everything. Like, I'm not nitpicking you. You don't nitpick me. Meaning, like, if you want to be that hands-on in your bookkeeping, go do your own bookkeeping. Does that make sense? I'm going to edit chart of accounts. I will bend over backwards to make sure it's set up the way you want it, but don't be changing the chart of accounts on me every month. Okay. Within reason, there is setup, there is room for changing minds. And you'll hear the client. Are they nitpicking you, or are they trying to improve this process so that you guys can work together well? I welcome the work together well. And you're going to hear that in tone and language and what their intent is. Okay. Cool. Yeah, you should, as you go, you'll make friends with some of your clients, and it will be kind of a fun endeavor. And often this is a big expense for them. Like, they are trusting, like, this is not the cheapest expense for a lot of your business owners. It's a commitment and it's an investment in their business. And I value that. Okay, back to, does the bookkeeper blueprint include calls? Cameron, I'm sorry to get distracted. So the unlimited program has unlimited calls, so you can get on with a coach every single day. You get access to Voxer, so it's like a walkie-talkie app. You get access to me and Megan directly. So if you're working on something, you get stuck, something's not working, you can send us a screenshot, you can message us. Sometimes we're able to respond in real time. And so you can listen to us give a message, you can respond, and you'll hear us say, oh, based on that response, and we'll just keep talking. So you can kind of talk with us real time with that. And then in the like monthly, that was Bookkeeper Blueprint Plus, but in the pro program, you get 2 calls a month that you can use for anything. They start on the 1st, they end on the 30th. So if you were to join October 29th, you would have 2 calls. You can use one on the 29th, one on the 30th, one on the 31st, and then you would have 2 more starting November 1st type of thing. But those calls are for you to use in that month. We have found that clients or students who get on calls more frequently and stay consistent getting on calls move forward faster. So we don't want you sitting on calls. If you're in the unlimited, we want you to use them. We want you to use Voxer so you're moving forward.
And what's the price for each of those?
That's a good question. Let me drop the. So there's annual pricing and monthly pricing on those. So if either of those work for you, but I'll just drop the link for you. Oh, I clicked the wrong link. And we recently made a change in the spring that changed how you get calls. Oh, you know what? This one doesn't have the 2 monthly calls anymore. Let me know. Let me or Megan know if you want access to the 2 monthly calls. That one's no longer accessible on our website. So that's an in-between between the Bookkeeper Blueprint Pro and the Unlimited. So, but we have to set you up individually for that one because we removed it, but I'm so like, we're still so in the habit of saying that. We found that students either wanted no calls and more co-working calls, like more group calls, when like that type of support, or they wanted unlimited. So there is a middle ground that we can open for you. It's just not on the website anymore at all. And we'll probably talk about that again because it's a hit and miss on students who do and don't want that one. And then here's the Premier. And so we updated the pricing to accommodate on that one. But if you're like, hey, this doesn't make sense, just let me know and I will help. So yeah, the unlimited stayed the same. So that's $79.97 or $7.97 a month for 12 months. So that one is a year-long commitment. And then the other one, let me give you the details about it because I think I just misspoke on that update. Okay, so the Pro program is now $24.97 and it's $247 a month. We had an in-between option. If you're interested in that, let me know. But $247 a month gets you into the program, access to all of the courses and the group calls, but there are no like coaching calls. So we made it so that you can just buy them as you need them. And then you do get discounted bundles. So Cameron, if you're like, hey, I still want to join the program, you want to wait on buying a bundle, you could do that as well. And then you would get a discount on those bundles.
Okay, yeah, it was really like the coaching calls. I was really because I don't want to like keep buying the bundle when this is probably more economical. This just to get, but it looks like I would have to keep buying call bundles. But okay, yeah, this makes more sense.
But they're discounted, so they're
Okay.
not the same price. They change for you on that, and then the unlimited, that's less than the cost of 2 bundles a month.
Okay.
If that helps. Makes sense. So if you're planning on doing 2 bundles a month for a period of time, we found it to be more cost effective to do the unlimited for students. So. Okay, guys. Well, I see that we're at time. But Cameron, you can email me questions or ask me on one of your calls. Okay. But if you want to hold off on buying a bundle, if you have any questions to get into the program to access that student discount, just let us know. Just don't delay buying bundles and then get stuck on your cleanups. Wonderful. I will. You guys next. Bye, guys.